money. So they borrow the money at 10% and book the finance cost of 10%. And presuming 10 years useful life, they also book the depreciation of 10 crores being 1/10. Over a period of time, A Limited has a relationship with B Limited, and B Limited requests A Limited, instead of they borrowing from outside, A Limited itself should give them 1 year credit period. Obviously, A Limited is bound to charge 110 crores as a price. I'm just sticking to the 10% interest rate. And this is the way sales figures are jacked up, by showing the deferred credit payment terms. And IFRS doesn't allow it. It says your 100 crores should go to revenue and 10 crores should go to finance income or interest income. So this amendment, all of you must be knowing, and if you do not, has been adopted by the old AS also in July 11. Then we go to the goods and services. The conditions, 3 conditions are common actually, and the 2 are different. So this slide will come to you. Then talking about construction accounting, which is the most transparent industry in India, construction industry. Do you agree with me?
Yes.
Okay. Construction industry is the most non-transparent industry of India, which generates the maximum black money. And even a child on the street will tell you that. So I don't have to be any great IFRS expert to tell that. Now what does construction industry do? Suppose there is a flyover. Mumbai and Delhi are full of flyovers, and I know even now the smaller cities are. If the flyover has reached up to this level, should the revenue be booked by the selling company? The answer under IFRS is no. Because if you take a car from here to here, I'm not good at drawing pictures, but it comes here, where will it go further?
It will go down.
It will not, it will go down. That's right, sir. So the risk and reward has not been transferred. Risk and reward has not been transferred. Okay. So the risk and reward is not transferred. So IFRS does not allow revenue recognition. But you all must be knowing that when Ind AS was to be formulated, FICCI made a strong representation to the government that please allow a carve out or a change from IFRS in this. So one of the major changes India has adopted is from IFRS is that construction accounting revenue can be booked even if the flyover is half, or a flat system where you have built a flat on 39th floor and that is still in air because even the basement is not ready. Still this revenue can be booked by him because basement is ready. So all of us, and especially Bombaites, what are they going to face? The slow construction speed, because so far as the construction industry gets to book the revenue without constructing the houses, why are they bothered about constructing houses? Therefore you will see when a common man, a poor man like me goes for booking of a flat, normally my son will get that flat ready. Share-based payment is one of the areas where professionals can really become global. And how to deal with them has been given in this chart. Most of you must be knowing it because both the institutes, all the 3 institutes trouble us with the final examination questions. And particularly the fair value is required to be considered for this. Somebody was asking me, does IFRS allow any time exemption from consolidation? And here are the provisions. This provision in one line, I would say there is no exemption, very frankly. Because there are so many complications. So really some SME where nobody has an objection that it need not be consolidated can be avoided to be consolidated. Now comes SME, IFRS for SME. and it has been simplified sufficiently to avoid a detailed and hectic exercise as far as the IFRS preparation is concerned. The standard is ready and can be adopted. Lots of retrospective applications are not required. Full statements are not required. Revaluation method not required, because it is presumed that SMEs doesn't have much of a challenge. So these are the few differences, and we can have them deliberated at a bigger forum, at a longer forum. Let's go to financial instruments. Financial instrument is one of the most complex standards. That's why you must be seeing that lots of MBAs do great career in finance companies, and you see them immediately going into the cars in the second year itself, whereas the professional chartered and cost accountants currently are fighting to get the jobs itself.
And engineers take 20 years.
Engineers take 20 years. Yeah, I understand. Okay. So here Murthy sir is telling me that engineers are taking 10 years, MBAs are taking 1 year to buy a car, and chartered accountant generally were taking 2 years, but thanks to, I don't know, currently whether they get the jobs, that's the challenge. But let's focus on this and learn something. This is IFRS 9 or even IAS 39 is nothing but AS 30, 31, 32. And the moment we will adopt AS 30, 31, 32 in India, and globally IFRS 9 shifts in 2015, then we are bound to have a great scenario where the reality will come out. To our shock, and I want to make this again a statement, many of us might not be even knowing that there is a concept called redeemable equity. And many companies have issued it, but they have not given the title as redeemable equity. I'm sure most of the people here must have been shocked. And if I take an equity, and this equity is issued to some foreign body, foreign company, foreign organization, and there is a small put option, I'm sure you won't be able to read it. But if I magnify, what I've circled is put option. Equity with a put option should actually be shown as debt. And it has become a clear-cut violation of ECB norms. And 30th September 2011, our government had come up with a circular to give a retrospective effect amendment to force this equity to be shifted into debt. But all of you must be knowing, right now that is lying under the carpet. Till then, people will be duped. How? Because such a company which shows equity, which is not really equity, bankers are giving huge loans. And when the bankers are giving the loans to an organization whose equity capital is not there, are nothing but creating future NPAs. How many companies, how many banks have such future NPAs? Please read Business Standard article. They are openly available to us. And I'm sure a few years down the line, we will have another humongous scam to be heard about this. I'm not an astrologer. I'm just telling you out of the whatever I read. But hopefully, such kind of things will get curbed if we adopt IFRS, or in Indian language, AS 30, 31, 32. And as usual, let us keep this responsibility of younger generation to push it. So that's how we are coming up to the financial instruments, and the IFRS 9 has simplified the job. Let me share with you some of the things on business combinations. How the mergers and acquisitions are dealt with. A new funda compared to the Indian standards which has come in is particularly on the fair value of net assets, where on acquisition the Nariman Point building or Cannot Place building will not be shown at 1 lakh rupee. It will be shown at 100 crore rupee, and therefore goodwill will become a negligible amount. Going forward, how to calculate the fair value of the consideration? I am giving you a table. The consideration can be immediate, deferred, or deferred and contingent. It can be in the form of cash. It can be in the form of holding company shares. It can be in the form of kind. And the fair value tells us on the first row that one should take discounted present value as well as contingent consideration at fair value. Should we do the goodwill reassessment? Yes. If the reassessment is as of acquisition date, it is done in 12 months and the situation existed on acquisition date. Now this area throws up huge opportunities for the young talent to work on IFRS. And I know many of them in the audience locally also are working on valuations of such nature. One of the person is sitting in Chembur itself for Jindal Group, right? So change in fair value is a charge to income statement. Non-controlling interests are required, and here is the fair value adjustment table. What happens to negative goodwill? IFRS says we don't believe there can be negative goodwill. So recheck your valuations, reascertain your valuations, and check whether it is really a negative goodwill. If it is a negative goodwill, give a credit to income statement, show it as a profit. Frankly, there are hardly any negative goodwill cases unless there are manipulated valuations again. So what's going to be, who is going to be the valuer? That is still $1 million question, because the Ministry of Commerce Affairs has published that they are going to create an institute of valuers. And Ind AS says gain on bargain purchase, that is negative goodwill, should be taken to OCI through equity or directly to equity. So no P&L. So that is another carve out. The second major difference, first is construction industry and second is negative goodwill. Very frankly, there are just three differences between IFRS and Ind AS. Construction industry, agriculture and negative goodwill. So if somebody says that, oh, I don't want to learn IFRS, I want to learn just Ind AS, then let me tell you, it is eyewash, it is one and the same thing. What appears in equity? Lots of things, share options, share warrants, all types of reserves, etc. So this completes my second small presentation, and now we are jumping into some other areas, especially we are getting into revised schedule 6, for which you might be eagerly waiting. And let me give you and take myself also a minute's break.
कितना टुकड़ा हो गया कांडी हो गया पहले ज्यादा अच्छा लगता है क्या है अलग कांडी हो हम एक था है अभी तो ना पुण्य लगी का इटालियन वर्जन में हाँ इटालियन वर्जन चलना है थोड़ा वापस से बहुत